Let's look at CVP example number 1. We're going to calculate the break-even point, and we're going to use Mike's Bikes as an example. Mike's Bikes manufactures bikes and has the following costs. The metal frames are $100 per bike. The rent is $2,500. The tires are $40 and the gears $160 for each bike. We've got utilities of $500 a month and wages of $3,000. Now, Mike sells each bike for $800 per unit. So Mike wants the answers to two questions. One, how many bikes does he need to sell each month to break even? And two, how many dollars of sales is that? So to do that, the first thing we're going to do is break each of these costs into fixed, those that don't vary with the level of sales made, and variable, those that do vary with the level of sales made. So let's start with the metal frame. That's $100 per bike, so that's variable. The rent is $2,500 a month. It's a flat rate, so that's going to be fixed. The tires and the gears are per bike, so they're going to be variable. And then the utilities and the wages are per month, so they're going to be fixed costs. So we add all those figures up, we're going to have total fixed cost per month of $6,000, and we're going to have variable cost of $300 per bike. Now we can calculate what's called the contribution margin. How much does the sale of each bike contribute to covering the fixed costs of the business? So we take the selling price per unit is $800, less the variable cost of $300. That's a contribution margin of $500. And now we've done all our legwork, we can actually calculate our break-even point. We said that in units is fixed costs plus desired profit divided by selling price per unit less the variable cost per unit. So let's plug some numbers in. The fixed cost was $6,000. The desired profit, well, we're actually just calculating the break-even point. So that is where profit is 0. So we'll just put in 0 to be thorough. We'll say the selling price is $800 less the variable cost of $300. Moving across, we've got 6,000 divided by 500. That is a total of 12 units. Now, the other way we could have done that was we could have taken a bit of a shortcut and used the same formula, fixed costs plus desired profit, and just divided by that contribution margin. We'd actually get the exact same result. It's just a question of which method do you want to use and which figures do you have. What we also can do though is say, well, how many sales is that to break even? We call that the break even point in dollars, and that is where we take the sale price per unit and times it by that break even point in units. So in this case, the selling price is $800. The break even point in units was 12. 800 times 12 is 9,600. So we can now answer Mike's two questions. The first one was, how many bikes does he need to sell each month to break even? We could say that's 12 units. And the second question was, well, how many dollars of sales of that? And we can say easily that is $9,600 of sales.